Good afternoon, everybody. Welcome to the Making Money Trading Stocks and ETFs with the Active Trend Traders. And I am on solo today. Mike's probably, both the Mike and Michael are probably enjoying the spring weather somewhere. I want to remind everybody that all the materials presented are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise for future performance. Hope everybody's doing well. Let's see. Yeah, most of the people on board. Okay. Hey, Bruce. Hey, Tracy. Okay, I'll be looking at questions. So if you have any questions, feel free to just type them in. I'll be about halfway through. I'll take a look at some questions. And here's a little bit about me. Majority of you guys know who I am and where I came from. And now I'm over in Hawaii. So, hey, remember, the best trade of the year comes around about every 2 to 3 weeks, so be patient. This is so true, and with the volatility that's currently in the market in a wide range, sometimes it's like the best trade of the year comes around about every 2 days. But again, we are taking short duration positions with this current market condition, and they've been working out very well. Speaking of which, I apply what I call the 5 pillars of active trend trading. Basically, what we do is what to trade: strong growth stocks and or premium ETFs. So that would be this case of this one, what to trade. UCO. This is a trade that we started about, it's been almost a month ago since we got started with this trade. We're looking to add to the trade, but the second pillar, when to enter, based on back-tested proprietary signals. And so we entered on this trade for basically put it in order to just buy it right off of the moving averages at 24.71. That was filled. I think the majority of you premium members got in on this trade. And then when to exit, we had a couple of targets here. We had a target up here just moving past the $27 range, and sure enough, it got up to $27.59, which turned out to be about 11% gain. So we took part of the profits there, and then I just held on to the rest because there was no reason to sell the second half. And as you can see, what's happened since that time is that we did a nice little pullback, which was a challenging pullback to get into a secondary position or refill up on the this position. And then basically it took off from there. We held on basically when we sold this position here for the 11%. What we did was we basically just made it break even. In other words, on the second half. So 24.71 was our stop on the rest of it, and now that second half is up close to 20%. So when to exit? What strategy use? In this case, we're buying an ETF and we want to build a position. And then what to expect? Our probability of success is about 65%. So here's what came out with the alert. Basically, was we're buying. I was buying 430 shares of UCO at 24.71. There was my stop loss, initial stop loss. 5%, 10%, 20% gain. As you can see, it's up in the 20% gain on the remaining portion. This looks like it's going to continue to do well, so we'll be watching the UCO to add to the position once we get a nice little another pullback into the moving averages. See, as you can see, we got a nice breakout above 28.52. And those who are looking for a second chance in this stock can look at the 28.52, pull back towards that as a potential entry for the stock. So the objective of today's webinar is to basically give you timely, actionable intel review at the end of the week. And so we do a real quick market review. Markets, and right now the markets are trying to catch a bid and move up strongly. Stocks, ETFs performance, and bonus trades if we have any. Here's where we're sitting with the active trend trading system and compared to the indexes as of about 9 o'clock this morning. Dow, S&P down for the year, NASDAQ Composite, and Russell up for the year. And here's a comparison of where they're sitting for the sitting compared to the high from last year. Let's go ahead and get in and look real quickly at what's going on. So there is Netflix. And we also did a real nice little trade on Netflix that worked out really well, I think, for the majority of people who did take the trade. So if you took the trade, congratulations. So let's take a look at spiders. As you can see, spiders are basically look where they're hanging up at is the big issue for today. Just below the 50-day moving average. As long as that 50-day moving average stays intact, we can anticipate the SPYs potentially going back down, dropping the 8, dropping the 20, and churning around down here around the 200-day moving average. Compare that to the SPX. SPX, okay, same. Just below the 50, and what's going on over here is that basically is also just about a 50% retracement. If we get above the 50-day moving average and the 50% retracement, we're probably, very highly likely we'll go to 618. And if we break through the 618, we're very likely to get back up into the 2800 level where we were at, 2781 around that area. And so we'll be keeping our eye on what's going on there with the S&P. But again, no break the 50. It's probably going to lose momentum and fall. I won't say dramatically fall, but go back down in here and test in this area down here. Very interesting. Now, one of the things I want to show you real quick, hold on a second, is just take a look over here on the weekly chart. We do have the TSI starting to turn around as of today. It is, but again, be aware, it is right up against the resistance area. Take a look at down here and look at the market forecast. Longer term momentum is still pointing down. So oftentimes the TSI and the shorter term market forecast momentum indicators will turn around earlier, which gives you an indication, okay, this is going to be basically a really good bounce trade. And once it bends the longer term moving average around our momentum, that's when it goes into a more significant move up, as we can see what happened back here, where TSI came down, started back up, TSI came down again, and almost simultaneously, this was February 2016, put in a really nice weekly hammer, and the rest is history from there. So keep that in mind. Okay, QQQs. QQQs. Again, similar type situation. Struggling to get through the 50 and move. It broke out above the 50, did a Pinocchio, it put its nose above the 50 today, and then fell back down. And basically then fell back down into the below the 50 and in this case the 8 or the 20 and the 8 and the 100-day moving average. So if it cannot get above the 50-day moving average and above the 50-day retracement, then we're probably going to roll back over and again test down in here, and that's fine. A couple of things to keep your eye on. What we are currently looking at also is what we're currently looking at is kind of a double bottom type function right here. One of the reasons why it is not a real strong double bottom is look at the shallowness of this momentum shift. Very, very, very shallow on the NASDAQ, which is, of course, the technology stocks. IWM. No, not IQM, IWM. Hold on. Okay, IWM basically is pushing its way up. It's the strongest right now of the three tracking indexes that we track. And the reason I say that is it is above all of its moving averages. However, it is approaching a level of where the sellers came in last time, which is right about anywhere from where it's at right now to approximately there, which is about the 156 level. And so it's getting into an area where sellers could show up. They haven't showed up, fully yet, but it's just something to be aware of. Again, it also is showing a nice little tick up with the TSI on a weekly chart. Those are for longer term. Well, so what can we anticipate for a potential for IWM is if it continues to move up, we could basically plan to take trades off of the 8 and 20 week moving average, which I'll give you an idea where that is. Let me draw. There we go. Which is right about where all the moving averages are right there. So that's a good bounce point, and we could see it move all the way up to the 160 level. So that would be about a $7 move. If you're trading TNA on that, and some of you may still be in the TNA trade that we started a couple weeks ago. So if you find trading TNA, just follow a similar type situation. If you're using the moving average channel and or the Keltner channels, if price action gets up to that level, that's where I'd look at saying, that may be a good place to take some profits off the table there. And so anyway, so that's what's going on with the indexes. Let's see, fib retracement. Why did you set at 254 and 2801? Those don't appear to be lows or highs. I don't know, Barry. Let's take a real quick look at that again. SPX. So, no, it's a swing. There's a swing high here, 2802, and there's a swing low there within that daily move. Now, and so that's, you can utilize these fibs on kind of any where you have a swing high and a swing low, even if it's within a larger perspective move. And so, yeah, that's, this is a good fib. One thing that's interesting, let's take a real quick look at this, as long as we're here. Let's go from this swing low to this swing high. And just look how things lined up, okay? The 0%, when we drew that in, which could have been drawn in way before this was done over here, look at what lines up. The 1618 retracement or extension lined up almost perfectly with how far price action fell. And so kind of interesting. That's what makes Fibonacci's so fun to utilize. So I want to move that. You can tell I'm kind of zigging around. I think it's the cold medication I'm taking. So, okay, let's run back to the slides and we'll get through those. And I want to show you a potential trade that's setting up that I really like. So, remember gold seasonality. Gold tends to be in a little bit of with a lot of the volatility that's going on out there, the uncertainty with what's going on in Syria and the Middle East, not knowing what the Chinese are going to tweet to President Trump and what President Trump is going to tweet back to the Chinese, or any of the crazy stuff that's going on out there, people may start pulling into gold. But regardless of if they do or they don't, gold tends to have a very nice seasonality that goes in between June and July. That's where we want to be interested in, definitely being in an active gold trade. Seasonality with NASDAQ, we are all the way out here to April now. April, you get a little bit of weakness in the midsection of April, which we're approaching right now, and then NASDAQ can get a bid from there, typically. Now, This is a seasonality chart that shows tendency. And you can't just lay a NASDAQ chart over this and match it up exactly. But when it shows tendencies, what we're talking about is that oftentimes these oh, darn it, Dennis. There we go. These lows, like we have here, major lows here, major lows there, those tend to be the points where it will catch a bid every year. And what I found is basically somewhere between plus 2 weeks and minus 2 weeks of that, what shows up on this date is when the buyers tend to come in. But they come in like clockwork every year within those areas. So got the Russell. Keep an idea with the Russell is Russell mid-April tends to get a bid, so we're approaching that time frame. And then also October. Russell is of the three entities that three indexes that we track. The Russell typically puts in the best performance from October through the end of the year. So be aware of that. Okay, here's where we're sitting with the active trend trading through as of today, year to date. And so here's what we are watching. One, it's been a really nice couple of weeks of trading here. One, the UCO trade. Currently it was at when I wrote this up, it was at $29. It's up at $29.50ish right now. So we sold one half of the position for 11% gain, and I'll be hanging on and trying to add to this as it makes its way higher. And then Netflix. This was a pre-earnings trade. It was a options trade where we bought 2 contracts of the April 190 call. We took off some of the profit when it passed up, when it went about 50% from 14.10 is what we paid for it. When it hit 19.20, we took off some profit. And then I was going to either do one of 2 things, and this was all made clear to the premium members, is I was going to basically wait until earnings, which is the 16th of April, which will be next Monday after market. Or if it doubled, I said, you know what, I'm going to take my profit and run with it. And so that's exactly what we did. So we went up with a total profit, and for the past 2 weeks, a nice cash flow of $1,920. And so, how many were able to catch that trade? I know some of you did. Okay. Awesome, great, Eric. I think, Jim, did you catch that trade? I thought you caught that part of that trade. And so, okay, here's Tesla. We put out a credit spread on Tesla last week, the 300 by the 305 call. Credit spread picked up 260 for it. We closed the first half of the position for $1.20, so we earned, we made a profit of $140 on that. And then we closed the second half today when the stops were hit. We basically put in a tighter trailing stop, got hit, didn't quite get as much as we really wanted to, but hey, it generated $198 worth of weekly cash flow. Good stuff. Excuse me. Had a pretty good time, pretty good week this week with the strategy. 3 trades, BABA, 398 on its income it brought in. And then we got stopped out on SPY as we adjusted the trailing stop today so that it would remain profitable. And we're waiting for a setup. Matter of fact, we basically have put out an order for a setup on Tesla, but we don't know if we're going to get filled on that one or not. So strategy 2, again, focusing on that, trying to generate somewhere between $50 to $1,000 per week. And as you can see, Netflix this past week, generated $1,410. So on average, we've been doing, pretty good since the beginning of the year on that strategy. So anyway, I'm going to cover one additional thing, and then we'll come back here to sign off. And so let's go over here. I want to put Grub up. And ooh, Tesla went up and hit a high, but then it's fallen back down, so that's good. We'll be covering Tesla on the final hour. So as we look down through Grub, and you look at the implied volatility, which we see over here on this side here, and we see right here there's a spike up, 73%. 73% on, which oftentimes tells us that, guess what, that's when earnings is going to be. Now, what we've been doing is basically taking a look at these potential earning runs. Your Grub. And there we go. And sure enough, here's the daily chart, Grub, and 5-1 before market opens is when it has its earnings. So 5-1 is on a Tuesday, and so we would want to be getting into a position, out of a position on April 30th. So if I wait 15 days, it means that I'm going to be closing the position on the 30th. I want to be in the position for about 2 weeks ahead of time. So, and this is a full at-risk trade. It's a pure speculation trade, but that's what, these pre-earning runs trades tend to work out pretty good, either buying the entity or the stock itself, or just, doing some kind of option trade. So that means on Monday, I want to be evaluating. And what's my evaluation on this? Well, I want to pick up somewhere between, let's say, 196.50 price value of the stock, to where it is approximately at now. It's at 98.10. I would like to be able to pick up some, buy some, options on this. Which options do I want to buy? Well, that brings me over here. I want to buy. Okay, this is the week of expiration. So I want to come down here and I want to go slightly out of the money, which is, and again, as you can see, this is about 2 strike prices out of the money. And look, I like the $100 strike, and I would buy the call. Now, some people get fancy with that, and they'll buy a call and a put, but there's a tendency for prices to increase going into earnings. Again, there's a tendency of that happening. So what this tells me is somewhere between where it's currently at right now, somewhere between $6.10 and $5.80, I should be able to buy some calls in there. How many calls would I buy? Well, I would make it where it was no more than, where it was basically no more than what I'm able to invest in that particular strategy, which is about 10% or $10,000 divided by 4 or divided by 5, which gives me about $2,500 to be at risk in this trade. So it just turns out to be that $2,500 divided by $6, which is where I anticipate I'm going to be able to get into. I could buy 4 contracts. And again, I'm going to wait until Monday to put in that trade. That way I won't absorb any of the weekend's time decay. And so I'll be looking to get into that trade. Or I want, excuse me just a second. There we go. Sorry, I had a big sneeze. So I want to see it, price action get down into this area here. I'd like to see it bouncing right off the 8-day moving average. So it's about $2 from where it's at right now. And so I could actually just do an estimate of the option, or wait until the price action takes me down there and then buy the option at about when it's down at 196. And so I'd get a little bit better deal on that. And then where am I anticipating it to go? Well, somewhere, So we buy the 100, which is the top of this range, and it could very easily between over the next 2 weeks run up to $100 or $110, excuse me. And if it did make that run, what would the value of the option be? Well, let's just take a real quick look here, and that'd be $12 above where it's at right now. And so there's earnings there. I'm going to do that on the 16th. So I'm going to go ahead and run this through to about the 20th, and I'm going to take, and let's say that volatility increased another 10% from where it's at right now, and it goes up $12. This is prior to earnings, and let's say it goes up another 10%. And let's take this all the way out to the 30th. And then we can work back from there. So the 30th, that's when we want to be selling this. And that particular option, what would be worth, would be about $10.87. And so that would be almost a double. If it happens, if it goes up, let's say half of that, I can say that's where I want to take some of my profit out. Let's say, assume that it goes up half of that by the end of next week. Yeah, let's say, yeah, there we go. By the end of next week, 100. So we could basically say, hey, at $8.84 or $9, which would give us about a 50% gain, we'll take half the position off. So Steve asked a really good question. Isn't the open interest on Grub a little small? What I find, Steve, is with the these weeklies, sometimes it does have a tendency to have lower volume. This will start to fill up as we get closer to earnings. But one of the things, the efficiency of the market, which I really like, is look at the spread there is only about 20 cents. And oftentimes with these entities that are light volume, the spread will be much more. Let's go back into how did it wind up? Yeah, it kind of pulls kind of low volume across the board. Let me go up here. So yeah, you got here to the end of next week, which is monthly option expiration. And as you can see, it's 237. Yeah, it's not a lot, but again, with the weekly options, I find that it's not an issue that it has concerned me in the past, and it's fairly easy to get in and out of the options with a liquid market. But I will use target prices. I won't do it at the market, because if I go market, I know that'll guarantee I'll get filled at the bid rather than the ask. So good question. So anyway, I'll throw that out there. It's not ready yet, but for the premium members, look for an alert on that on Monday, and then we'll proceed from there. So with that, I will basically say, keep the A growing and trade wisely, profitably. You can catch me on Facebook or Twitter. And if you're a premium member, stand by for the final hour. And so from my home to you, until Monday, aloha, trade well, and prosper. Good day, friends. God bless.